I'm Scott Shuttleworth from Montgomery Investment Management and welcome to this week's video insight. Today I'd like to run through some general thoughts about declining stock prices that we've experienced over the last few months. The first item we take into account is that a share is simply a small slice of the ownership structure of a particular firm whose value is dependent on its present and future profits. Hence, whilst the price of this share may fluctuate, those future cash flows and hence the value of the firm may not necessarily move in sync. Successful investing is simply the art of receiving more in terms of present and future profits than you ultimately pay for with your upfront investment. Hence the phrase, value is what you get, price is what you pay. So if shares fall sharply but the expected future profitability of the firm hasn't changed, it allows investors the opportunity to pay less for the same amount of future profit. Looking around the market, there are some companies which truly deserve the share price falls that they have experienced. However, many haven't, and this is a considerably large opportunity for both the Montgomery domestic and global funds. This type of investment theory is sound and well known, but it's not necessarily comforting to investors who have seen the consideration of their portfolios fall over the recent time frame. The second item we take into account is that over the long haul, the portfolio's return should be more or less linked to the increase in cash profitability of the firms which comprise that portfolio. Growing profitability takes time, which is why shares generally require a 5 to 10 year investment horizon. Hence, we'd expect the higher value of the shares in the Montgomery of the portfolios to be realised over the longer term. Whilst the returns of stocks have generally been negative over the last few months, at Montgomery we've undertaken a process to identify the very best opportunities post the sell-off. The lower prices provide a rare opportunity to redeploy capital into the shares of businesses of the highest quality, of which only several months ago were too expensive. And most importantly, the low price both reduces our downside and improves upside for those invested funds. That's all for this week. Please follow us on Facebook and Twitter.